This article majorly highlighted a couple of key areas, which basically rotated around why banks such as HDFC, ICICI are doubling down on their retail lending portfolio and decreasing concentration on their corporate lending side. Surprisingly, even during pandemic FY21-22, about 50% of the loans that the incremental lending that happened in the retail loan side. In July 23 alone, out of the 100 rupees that went out, 57 went out in retail loans. Now, why banks are so gung-ho about retail loans and why a decreased focus on corporate loans? I think this is an important aspect for us to understand. First of all, the NPAs traditionally for retail lending for business have been less than 2%, which is very desirable for a bank. The ticket sizes in retail loans are small. Usually a typical retail loan will be, say, about a couple of lakh of rupees, which helps banks in diversifying their portfolio across multiple such borrowers. The interest rate, these are unsecured loans, so the interest rates on such loans is typically higher than what a corporate loan would yield. Also, we've also understood that small and large businesses get impacted first in case of an adverse macro environment adversity, and which is where we've seen that retail loans, because they are diversified, because they are smaller, because they're given out to masses, have performed better. Now, banks as financial institutions, definitely they have an opportunity to invest in such asset class, but this is only available to a few institutions. How do we take it out in the masses? How do we and which is where, with the advent of technology and with the launch of P2P lending platforms, investors like you and me typically have an access to invest in such kind of investment instruments. Peer-to-peer lending platforms such as ours take care of end-to-end process both for the investors and for the borrowers, right from sourcing, from origination to sourcing to risk assessment, due diligence, disbursement, collections, and repayments. As an investor, you register online on such platforms and start your journey. Like any other investment opportunity, this also comes with its own advantages and risks. Few key advantages of P2P lending. One of the key metric that we have to understand here is that this is not linked to the market. So investors still earn stable and predictable returns even in a volatile market situation. This gives access to higher returns. Generally, the yield on such platforms will be on the lower side of double-digit returns that investors make. There is no intermediary in the process. No financial institution, no banks are taking money. These institutions are not taking money as deposits and then deploying. It is a matchmaking platform wherein both investors and borrowers come together. So, thus, the benefits are passed on to both the parties involved. Diversification, this works as a very good asset class when you wish to diversify outside the traditional asset classes such as equities, mutual funds, etc. A few risks that all of us assume because it's an unsecured investment, so there is a risk of default. There is a risk of over leverage in the retail audience. And second is counterparty risk, because typically it is assumed that P2P lending platforms, they take deposit and then deploy on behalf of the users. I will try and address both these risks as we go on in the presentation. A bit about us, that is me. It doesn't look like me, but that is me. So our entity's name is Transactory Technologies Private Limited. We are registered with RBI as an NBFC P2P. The company was founded by me. Sorry.
What is P2P?
Peer-to-peer. Person to person. There are two people who come together. There is somebody who requires money. There is somebody with excess capital. We bridge the gap and bring them onto a common platform. And we take care of the end-to-end process for both the parties involved. we running the business. We pride ourselves as being one of the most tech-driven platforms that ensures transparency and risk mitigation to all its stakeholders. Now, peer-to-peer lending has been in place for a few years, and how do we do P2P lending differently is something that I would like to highlight. I mean, when we started the business, it used to run like a plain vanilla peer-to-peer platform wherein investors would come directly, borrowers will come directly, then we would start calling the investors and tell there is a sort of naya loan ek live and try and put some money in those loans. We started from that to today where we are processing lakhs of applications every month. And this is only possible because we changed our approach slightly on the loan sourcing side. We understood that it will be difficult and also when we started, we understood that we were perceived as a riskier investment. Only people who were not getting loans from banks were coming to us. And which made us think that do we wish to risk somebody else's capital in such kind of investment. What we started doing around 2018-19 is we started an anchor-led model for loan sourcing, which is basically that there are certain set of companies who have access to good users in every category. For example, people who would go to Bajaj Finserv, HDFC for loans. How do we cater to those kind of customers? And we understood in every category, medical loans, education loans, no-cost EMI, subvention-based loans, merchant lending. We understood that there is a set of companies which will have access to the top 2% of the customers. So rather than competing with them, what we did was we brought both the strengths together of both the organizations of origination, due diligence, bundled them together and formed what we call as the P2P 2.0. And the kind of platforms that we're talking about right now are fairly large organizations. I mean, recently, a couple of quarters back, we onboarded Navi, which is promoted by Mr. Sachin Bansal. All our investors are now have an opportunity to co-lend with Navi on an 80-20 arrangement. One of the key parameters for success of a P2P lending platform, I feel, is the diversification. Even though these are micro loans, small loans, an average loan will be say about 30, 40, 50,000 rupees, we still feel that putting all your eggs into one basket is risky. It is very important that we diversify the funds of the investors. Let's suppose somebody comes in with a couple of lakh rupees. Now we've worked so much on our diversification engine that money gets diversified in at least 3 to 4,000 loans. This happens across multiple layers, multiple levels, across different loan types, across different geographies, across different borrower categories. And we pride ourselves as having one of the most sophisticated diversification engines. We have now reached a stage wherein we are able to deploy as low as 100 rupee also in an individual loan. And this is, I would say, one of the prime reasons for our success so far. Another very important aspect that a lot of people ask me today, since today morning also, I think, is how do we safeguard the interest of the investors? That is what the key mantra of running a successful P2P lending business would be. So, just to give you an understanding, I mean, our gross yield on a portfolio level is 22%. So, on 100 rupee that will be lent out. In an ideal scenario, in a risk-free scenario, I mean, 122 is going to come back. Current NPAs are less than 1%. Let's assume the peak NPA is 2.5-3%. The net yield on the portfolio will be say 118, 119. What we've done as an organization is that we've aligned ourselves to the interest of the investors, to the incentives of the investors. What we do is, let's suppose an expected return on the platform is say 11%. So the first 111 will go to the investor, and then rest of the money will go to us as our margin. So this gives us a good cushion in terms of margin of safety for the users. The current cushion that we have is anywhere between 8 to 10%, which is at least 4x of what our peak NPA would be. And this is what I'm talking about, NPA at a pandemic kind of level. That is the kind of cushion that we have which is where the investor will start having some impact on his interest income, and then another 10% for it to start impacting his principal. So by aligning ourselves to the interest and goals of an investor, we've been able to achieve. We've been able to, over the last 3 years, not even a single investor would have not made the kind of expected returns that we told them. Counterparty risk is fairly important to address here. RBI came to the party fairly early for P2P lending platforms. RBI came out with the first consultation paper in 2017. Luckily, we were one of the incumbent players, and RBI came out with the first set of draft of regulations and clearly defined the fund flow mechanism. To help you understand it much more closely, both investors and borrowers' funds go into an escrow. These are two separate escrows which are maintained for investors and borrowers. Every transaction that goes out of the escrow is approved by a bank operated trustee. In our case, this is ICICI Trusteeship Limited. So there is no way that the money is not used for the desired use case. There is no way that I or anybody from the company will be able to siphon out this money. There is no way for us to, and we don't take any money in the current account. I mean, all the money that is coming in from the platform through checks is going directly into the escrow system, and then every transaction that goes out is approved by a trustee from the bank. Now, say about 2020, we understood that P2P lending or Lendbox was a complicated investment. It was not very easy for a retail investor to understand that as an asset class. So what we did was we built a wrapper service. We built an AI-driven investment P2P investment platform called Per Annum in 2020, and which is where we bundled all our best practices that we had learned over the last 7-8 years. We brought all the practices together, and we made sure that we cherry pick the best borrowers. The categories that we focus on in the Per Annum product are very low to low risk categories. The defaults are sub 1%. And the goal here is to only focus on borrowers which are top quality, which will ideally be a HDFC bank or a Bajaj Bank customer. And how we are able to do it is by working with people who have access to loans in a particular, best loans in a particular category. I mean, for personal loans, we have Navi, Unicards. These people focus on top tier customers. In merchant lending side, we have Khata Book, MSwipe, Kish, and so on. And just because it is AI driven, so there is no leakage in terms of loss of interest. If you deploy money today, your deployment happens pretty much real time. You will start gaining daily interest on your income from tomorrow midnight onward itself. Just to give you a brief about where we stand today, we roughly manage close to 2,000 crores of capital for investors. About 4 lakh investors have a current outstanding balance with us. We're now sitting at a stage where we are roughly generating about 1 crore of wealth for our investors every day. Biggest channel for us over the years has been direct channel. We run a lot of digital campaigns to onboard users. We currently onboard about 1,000 investors every day. About a couple of years back, we started focusing on the indirect channel, and which is where we started working with the financial distributors, like a lot of people here. And we pride ourselves today of having close to 1,200 such IFAs actively working with us on a month-to-month basis. Deposits, we now have reached a stage where our daily deposits are close to 16 crores. In terms of our plans, we have two major plans in which we invest capital. Per annum, we wanted to keep it fairly simple. We wanted to keep it fairly intuitive. And when we were ideating about per annum, I mean, the first question that came to our mind was, what is the simplest form of investment that we can think of? and it was putting your money into a savings account and then opening an FD. And that is how we created per annum. We created per annum in a way that you have two plans, simple plan. One is where you put money today in a liquid plan, flexi, and then you can withdraw anytime. You get daily interest income at the end of the day, and you can withdraw principal and interest anytime, no question asked. Second is similar to how you park your money in a fixed deposit. Our fixed term deposits start at 3 months and go up to 5 years. In terms of yield, we in the flexi plan we give an annualized yield of 9.5%. On a 3 to 5 year plan, the yield is 10% per annum and goes up to 14.5% for a 5-year cumulative plan. Thank you so much, everyone. That is more like what we do. Happy to answer any questions. And there are a few distributors who reach this stage fairly fast. We would like to felicitate them with a small memento. Yes. Any questions? First of all, I think that's
how do you generate this? Like, what are you?
Sorry?
And how do you generate these sort of returns?
So sir, it is a two-sided platform. There is one, somebody with a surplus capital, and there is one, somebody who is seeking that capital from us. So what we do is we create a system wherein you, somebody with a surplus capital, invest. Let's suppose I am a borrower of me, and I give monthly interest or daily interest on my capital. Today, a lot of our portfolio yields either a subvention, which is you give interest upfront, or you pay daily installments.
But what if I default? If I take money?
So that is where we created a margin of safety, is what I was mentioning here. That our average yield. So and diversification is a key role, is a key area that you do. That there is no one-to-one mapping. Always there is one to n. At any point of time, you will have 2,000, 3,000, 4,000 active borrowers in your portfolio, so that there is no concentration of risk in a particular segment, in a particular location, in a particular geography, etc. One is diversification. Second is that the gross yield at a portfolio level is about 22% for us, and the NPAs are within 1%. So what we've done is that we give the first 111 to the investor, and then rest of the capital will take care of the default, and then
you mentioned that
yes.
You mentioned that you are getting on board with other lenders like Khata Gold. And basically, where you are packaging those things and giving them credit.
How to do
So it is not packaging, but it is a category of loans
So-
that you can invest in.
So the underwriting of loan is happening at their end. Is essentially-
So it is a co-created policy at the end of the day, because they are closer to their user, and their user might not fit into the standard template of a bank. And there is a lot of data that they would have about his user behavior. Let's suppose a merchant of Khata who's been working with them for the last 2 years has an average working business with them, say about a couple of lakh rupees on a weekly basis. I mean, that is the kind of insights that we get into. I mean, at the end of the day, final decision, because we are the regulated entity, the final decision rests with us.
So are you involved in the process of underwriting, or is it?
Yes.
Navi is your, what Navi is?
So
Navi company is,
Navi gives out personal loans.
so you are taking money from them?
No, we are not taking money from them. So we are co-lending with them.
Okay.
So in Navi's relationship, it is a 80-20 split. So every loan that goes through Navi's network, 20 rupees will go from Navi's own NBFC and 80 rupees will come from our investor network, which gives a lot of comfort to our investors to invest, because they're directly co-investing with the NBFC, which is managing upwards of 10,000 crores of capital right now. Sir.
So, in the focused loan categories, what I see is the zero cost EMI seems to be the least risky.
That is where.
So, if an investor does an investor have a choice that my money should not go with, because the other loans seem risky to me, personal loans and all those loans. So my investor money should only go to 0%.
So there is a way to do that, but most of the investors we've seen. So there are 3 mechanisms for you to deploy your money. One, the traditional way, that you pick each and every borrower yourself, which now we don't recommend because our engine can do that much more efficiently for you. Second is, yes, you can put in a particular category, like you rightly mentioned, low cost EMI or a certain tenure or something. Or you can let us, and we tell you that this is set of borrowers where it is going to go into, and then our system takes it. So there are three options available. Most of the time we've understood that after some time, people usually start the journey more manually. And then once they build some comfort, they start deploying money into our AIP system.
So I am not talking about taking each borrower as such.
You can do it in a
As
category also.
category.
You can do it in a category also. You can do it in a category also. And that is why I said, I mean, over time, which we've seen is that people start from a manual process, they go to a category focused process, and then they go to a completely AI solution that helps them deploy and efficiently gain returns on that.
So when you onboard the client directly, what kind of investors you are witnessing that coming? They are mutual fund investors?
These are people who would have some exposure to equities. Very few people are the ones who would be the first time investors, but that is say about 5%. But a lot of people would have an active portfolio in equities and mutual funds, etc. People who understand. See, we are still, when it comes to the layers of investment, I mean, we are still slightly sophisticated format. I mean, this is not the first choice that people come to. I mean, FDs probably are the first ones. PPFs are the ones that people usually go to, which is where we try and pitch ourselves as somebody who can give extra returns on a fixed income product. But yes, you're right, that these are people who would have exposures in equities and mutual funds. Maybe smaller, large,
Yes,
but
I see, I wanted to understand.
but there are a lot of people nowadays which are C-level executives, VPs of large companies, younger people, and a lot of people who adopted this early on were people either from the banking sector who understand lending business, or from technology sector, people who are comfortable transacting online. Because the entire journey is online. Our fund flow, all of that happens through the platform itself. You can start seeing your daily accrued interest on the platform itself, and you can withdraw anytime in the fixed term. And in the fixed term plan, you have an option of redeploying that capital automatically, or you can take out the interest income every month.
Excuse me, do you manage the contingency fund for NPAs and all?
Sir,
Any
though
provision
we are
for
not
that?
allowed to create a provision as per the regulations of the RBI, but as I said, I mean, what we've done in terms of our product positioning is something where we don't we don't book our revenue upfront. What we do is that at a portfolio yield level, so let's suppose if the investor yield is above expected returns, that is the kind of margin that we make. Net of difference.
You might have earmarked something.
So that is not allowed by the
Basically, officially it is not allowed. But actually only those companies are surviving in the long term, those who are making provisions in advance at any point of time. The ship should not sink. Otherwise Titanic can also sink.
That is what I am saying, sir. At a portfolio yield level, that provision is automatically created because the yield already has that cushion in place. So if I tell you that yield, currently if you see that the portfolio yield is about 22%. So the cushion, and we pass on say 10.5-11% to the investor. So the cushion of 11% is already there in the product.
You are keeping the cushion there just in case of any mishap. You can have from the promoters. No. Provisioning is not officially. Unofficially भी business में provisioning करनी पड़ती है.
extra revenue generate हो रहा है, that can be kept as a provision.
Yes.
वो रखा रहता है. But excess हम funds नहीं, capital नहीं रख
नहीं, वो capital तो हो ही नहीं सकती. मतलब बुक्स ऑफ अकाउंट्स में आप दिखा नहीं सकते, पर आपका सिक्योरिटी प्रोविजन, भाई कैमरा सिक्योरिटी का तो लगाना पड़ता है ना. तो वो सिक्योरिटी का कैमरा भी लगाओगे, चोर लेके ना भाग जाए वो भी होगा, तो उन सबके इन्वेस्टमेंट का खर्चा तो हो गया.
तो जो ये एक्स्ट्रा बन रहा है, we keep it in escrow account, not in the revenue. The investor has made जो account से.
Can we get the balance sheet of?
So this whatever the investors' money going into the escrow account and the borrowers' money, which is also going into the escrow account. That is not accessible to the company and the company members, right?
No, so that is not accessible, but our revenue will come from that money.
Well, I mean, you cannot deploy on your own. Like bank can deploy.
So this is not a black box. At the end of the day, RBI mentions that as an investor, you have to be aware about where your money is going. So at any point of time, when you go to the application, you can see what your portfolio is currently. So you will see each and every rupee is earmarked to the borrower. Just that you as an investor don't have to do that legwork yourself. The system is automatically. But yes, you're right that I as a company cannot utilize this money for any other
Yeah, like in
purpose.
a cooperative bank, there are lots
Safety
of
margin,
things that are
yes,
made. Yeah, I know.
हाँ सर तभी अगर आप सिस्टम देखें तो there is a trusteeship that has been put on top of the escrow account so that every transaction should be used for desired purpose only. So each and every transaction is approved. चाहे हम कभी भी transaction करें, जब तक approve नहीं होगी तब तक through नहीं होगा. So that is why I mean this also works at some point of time also works against us because there are now expectations in terms of a lot of loans that go real time near real time kind of experience वो हमारे साथ build नहीं हो पाता because obviously every transaction which goes out of the account has to be approved by us. ना करते भी वो 1 घंटे का टैट है जो लगता है which nowadays I think is a very big turnaround time for a lot of lending short term lending kind of applications.
Thank you.
How big is this industry?
So there are 4 large players.
Okay.
There is us, Equiloans is about to take next. Clearly Equiloans is the largest. We are number 2. Then there is Lazy and Infection. 4 people manage roughly around 10,000 crores of assets. And the others are fairly smaller. And this is RBI mentioned was completely small.
But the total market size, he was asking about the total market size.
Industry size.
10,000 crore.
10,000 crores.
नहीं 10,000 करोड़ तो आप 4 ही जो लोग हैंडल कर रहे
बाकी बहुत छोटे
बहुत small है।
हैं।
तो छोटे छोटे बहुत सारे हैं ना?
Sir, there are 25 licenses.
25.
There are 25 licenses, but बाकी सब are under 50 licenses. आप assume कर लीजिए उसको सब मिला के एक और 1,000 crore. Assume 11,000 crore is the size of the industry right now. And with the kind of growth and the kind of acceptance that we've seen over the last 2 years, I mean, we are foreseeing this to be at least a 50,000 crores industry by the end of next financial year. And we want to have a very big pie of it, and thus I think a lot of and we cannot do it with the support of distributors like ourselves. I would appreciate that you ask as many questions as you can, try out the platform as an individual investor, see how the journey is. We have worked a lot on the user experience. We've worked a lot on ensuring that investors do not lose capital at all. This will be apparent when you start your journey on the platform. I would request you to start, minimum investment to start the journey is 50,000 rupees. Try it out, see for yourself. If you don't like it, I mean, you park money in the liquid plan, you can withdraw money on a click of a button, and nobody will call you to say why. Thank you.
Retail it is 50,000, but we have customized for the advisors. Through advisors, investor can invest 10,000.
Pardon?
There is an option. Through advisors, distributors, investors can invest 10,000 also. There is an option to create a link from the partner dashboard for 10,000.
We have a proper dashboard for distributors to see each and every investor to see their portfolio, how the portfolio is performing, what kind of interest incomes are being generated. And they have toggles to take care of whether investor wants interest income every month or they want to accumulate every month. All those options are available in the dashboard.
Thank you, and we would like to facilitate issue of our advisors. So first of all, Mr. Paresh Takiawala from Lendbox.
Vinci is a veteran in the investment investment community. I think sir support कर रहे हैं, तो I think at least we are doing some good job. I think.
You are doing exceedingly well, and I feel there is a excellent track record of this peer-to-peer lending Lendbox company, Victory, in this field. And I feel outside India, globally, it's a very, very huge industry, peer-to-peer lending. And it's about to evolve in that way here in India also, because of the drive which the government is also running, that is the financial inclusion and the remotest place. So that's why it's going better. So let's enjoy that night.
Thank you, sir.
आप कहाँ से हैं भैया?
Sir?
You are from Mumbai?
Navi.
No.
Mr. Puneet from Kintegra. He has been associated with us for many years now.
Puneet is our youngest distributor. I think he's just because of being younger. I think he understands that a lot of new age products are something which will fit well into a lot of the portfolio of the investors. Thank you. Comparatively younger.
So, from Upper Crest Wealth from Barodra, the game is here.
Thank you. Takes care of our account at Upper Crest. Upper Crest is one of the most consistent distributors that we have. I think since many long months, I think they've been consistently distributing our products. आँखें बंद करके बताया हमारे को Upper Crest से 10 करोड़ रुपए आया.
No, but the P2P industry, like we think this is the whole alternative industry, will be the next mutual fund industry. In UK, we can say that 5 to 7 years next. And the investors are also now accepting the new age products and all. So yes, you can definitely get a exposure or some of the portion to the P2P lending as well.